Good afternoon. This is Tim Legman, BIS Commodities. Taking a look at the weekend review. Let's just start out to see where we close for the week. We'll start out with December corn. Looks as if we're going to be up about 18 cents in that contract at 420. Soybeans up 36 cents in the November contract. Last tick at 1086. Livestock markets, cattle futures down 378 on the week at 103.37. D's hogs down 263 at 67.17. Looks like the dollar is going to close a little weaker, 90 points lower, 92.76 area. Oil continues and all energies continue their sideways trade. Looks like we're going to close below 40 bucks in December crude. And the Dow looks to be down maybe a couple hundred points on the week at that 28,200. Taking a look at corn for the week. Corn futures, December contract closed on new highs the last 4 days of the week. We're seeing open interest explode higher as well. Open interest was pushing 100,000 contracts up on the week. So you're seeing new positions coming in, new buying coming in to offset some of the selling as well. Continuing to see the spreads tighten in here, taking away any carry whatsoever in the corn market. We did see these come into within a penny or two of March and 2 to 3 cents clear out to July. So with the spreads tightening right now, it's telling us this is certainly a demand-led rally at this point. You're looking at strong basis here in the central U.S. We expect it where we're located, but pretty strong basis everywhere at this point. But this, with the spreads as tight as they are, one would think basis would be much stronger with the local end users. But so I think that's telling us this is export demand. This is an export demand-led rally right now, and with the river basis pushing higher, there's business being done and or business expected to be done. So we are seeing some daily export sales announcements to China, and China has been the biggest surprise as far as demand coming in and buying corn from us at rates we haven't seen in quite some time. There are concerns or bullish concerns that they'll have to continue to buy from us as their corn futures price continue to flirt with all-time highs over there. We don't know what's going on in China, but if their corn prices internally are testing all-time highs, something's out there. So that supported the market as well. So I think that trend probably continues until we're told something different at this point. Taking a look at soybean futures, inverted already. No went to a premium to Jan today, so that market's telling us the same thing. It wants our beans right now. Cash and futures both are inverted in these markets. We have seen the daily sales announcements from China slow down as of this week, but we have seen other sales announcements to other countries, which is positive. So, and some of that is coming off continued concern of Brazil production down there, as they're delayed to their growing season has pushed maybe more of the country into the January timeframe delivery export sales from us. Also this week, Brazil announced, actually towards the end of the last week, announced the removal of tariffs for imports for corn and beans. That's positive. They made no announcements that they plan on importing corn and or beans, but why remove the tariffs? That's just add to the bullish features here as well. So, and as I mentioned, the rainy season has started in Brazil 2-3 weeks late at this point. So we'll continue to monitor that weather in weeks to come. So now, as I mentioned, beans did close very strong today, and we actually closed at new highs and made new highs today. And we've seen a massive volume push in the last 5 minutes or so. And I think that was due to the fact today that we did have November options expire, and 1080 strike had a large amount of open interest. So there could have been a lot of short calls covering there today. And I would suspect that was part of the massive volume push here on the close today. So as we move into next week, we'll continue to monitor export sales, which have been very good from a weekly perspective for both corn and soybeans. And we'll continue to monitor South American weather as well as Russian and Ukraine weather, as there are concerns of dryness over there with their winter wheat trying to get it planted as well. That is obviously adding to the feed grain concerns moving forward. So as far as any reports coming into play, we're still a few weeks out from our next supply and demand report. So I think in the meantime, there's nothing here to tell the market to back off at this point, as we are seeing massive inflows of managed money as well. Nothing in here to tell them to exit their positions here at this time. So it feels like it's still a two-step forward, one step back type of trade in here. Over to cattle futures. Opposite of what corn and beans have done this week, big hard sell-off over $3 on the new wider limits this week that occurred on Monday, seen the hard sell-off. And then we managed to grind sideways or chop sideways the balance of the week. A lot of reasons given for a Monday sell-off. COVID scare seems to be the driver in here, is that may weigh on demand moving down the road. I'm not sure I buy into that, because I think domestic demand is underrated. As we've seen the restaurant business take a hit, I think domestic demand has been very good. We did see cutouts down for the week, slightly down in both the choice and select. Cash was weaker as well, a couple bucks as a whole on the average out here. Cold storage report came out this afternoon. Beef, not a big change there, up 3% from last month for beef, down 1% from last year at this time. We did have a cattle on feed report out today after the close. We were looking for placements around 103 point, we're looking at numbers on feed at 103.3, came in just shy of 104%, slightly bearish. Placements 102.5 was the average guess, came in at just shy of 106%. That's bearish. Marketings came in line with around that 106%. So maybe you see this thing trade on the open on Monday morning, but I think we'll continue to monitor the bottom end of this trade, the big sell-off on cattle, the follow-through sell-off Tuesday morning at those lows, continue to hold in here. Maybe we can see a little bit support in here, as it felt like somebody was blowing out of this thing. We'll continue to monitor the cutouts as well, but I'm thinking and hoping that we can find some support down here at the bottom end of this trade. Hog futures sold off hard this week too. Yesterday, December futures sold off $3. Limit down. Expected a push lower here today. We got a lot of volatility right on the open here. But we did manage to close the December higher, and I think that's because our cold storage report continues to be very bullish, as we did see stocks about the same as last month and down 22% versus a year ago. So even though we're up around 103% as far as production on the year, we're finding a home for it via demand, domestic demand, as well as exports. So we're continuing to eat that up. So hopefully this weakness that has occurred here in the front end of December futures can find some support. We did see cash sell off late this week, but the cutout continues to hold up there at that $95 to $100 area. So there are some very good margins out there as well. And I think that'll be the key next week as well. We'll continue to monitor that cutout, and that cash index continues to stay at a premium to the December futures. So the other thing to keep an eye on too is, are we going to see any of a slight lull here from the euthanasia, from the whole COVID scare, if and how much occurred back in that March time frame? Maybe that is to show its head right now as well, even though the USDA has claimed that 180-pound plus pigs in the last quarterly pigs report should be up about 10% of the year. those numbers don't seem to be showing up with the weekly kills. So if you have any questions about these or any other markets, please feel free to give us a call here at BIS Commodities at 1-800-373-2525.